Welcome to the WTR Biotech Spotlight Podcast. I'm your host, Tim Gerdeman, Vice Chair and Co-founder and Chief Marketing Officer of Water Tower Research. In today's WTR Biotech Spotlight Podcast episode, I'm being joined by my WTR Biotech Equity Research colleague, Do Kim, for an update on his sector. Good morning, Do, and thank you for joining today's podcast.
Hi, Tim. Great to be here, like always.
So, Do, you came on the WTR's Biotech Spotlight podcast last November to talk about biopharma trends for 2025. A lot has changed, obviously, since then in the world. What's changed for biotech since that time?
Yeah, I definitely think it's a good time for an update on the biotech industry. A lot has happened since our prior conversation. When we last spoke on this topic, it was a few weeks after the presidential election. And just to set the stage, we had signs of a biotech recovery heading into the election. Interest rates were going down, capital markets were picking up, positive clinical data when they occurred for these smaller biotechs. They became funding opportunities, like we saw, prior to 2021, and not liquidity events for investors to cash out. All good signs. But after the election, we had a brief biotech sell-off when Trump nominated Robert Kennedy Jr. as the head of the Department of Health and Human Services. And it was pretty well known by the medical community and by biopharma that he had some severe anti-vaccine and anti-science views. And this was the environment that we had our initial conversation. There was definitely uncertainty around the Trump presidency. We knew that political and regulatory themes were going to be an overhang for the year, but there were reasons for optimism, I thought. You had a Republican-controlled government that meant less regulatory scrutiny, possibly more M&A. That should drive biotech valuations. And we had this growing FDA flexibility around drug approvals, a lot of accelerated approvals, especially for rare diseases, gene therapy, cell therapies. And there was some hope that RFK Jr. would not be confirmed. And if he was, that he would have a limited impact on the federal health agencies. And as everyone knows, and what we know is that none of that has happened. And there's almost a universal concern that the changes that are occurring with the federal health agencies like the FDA, CDC, and NIH will have this lasting negative effect on biopharma and drug innovation in the US. When you look at the overall stock market, it's been a bad 100 days. But for biotech companies, it's been worse for the past 6 months. You have the mass layoffs at the health agencies, fear of inflation is back, and a possible recession from Trump's tariffs that have really pressured biotech. And I could go into more details in these lines if you like.
No shortage of headwinds, it sounds like. So moving on, though, what have been the main concerns impacting biotech over the last few months beyond what you just touched on?
Yeah, I think when you look at these macro issues that affect biotech generally, there's certain changes that impact small biotech more, and then other policies that affect mostly large biotech. The pre-commercial smaller biotechs, the primary concern is about the economy. Inflation, the uncertainty about interest rates. If you look back at 2021, it's rising interest rates that caused biotech to crash. We've seen capital markets and public funding slow down. And there are a lot of biotechs with less than 1 to 2 years of cash runway left. The other main concern, like I mentioned, is the changes in the health agencies. Investors are worried that the FDA workforce reductions will negatively impact drug approval timelines. And while most biotech CEOs have come out and said they haven't experienced any notable changes, we have seen a few reports that the agency is missing a couple of PDUFA dates for approvals, and that rarely happens. There's also been a delay in a post-rejection hearing that a biotech company was supposed to get, and the FDA blames the staff cuts for not being able to hold it. That's a concern that a downside FDA won't be able to handle the important company interactions about, the next study, their protocols, give regulatory feedbacks, do the required manufacturing inspections, all in a timely manner, and just because there are not enough FDA personnel. Now, when you look at the larger commercial biotechs, it's the pending pharma tariffs that are the main concern. Those are going to be announced in the next 2 months. That's according to the Commerce Secretary. The worry is the timing, of course, how big these tariffs are going to be. Are they going to be 25%? Will they be more? What exactly will be affected? There's a whole supply chain of products that it takes to make the finished drug. You have the active pharmaceutical ingredient, the API. You have inactive substances, raw materials. Investors hate the uncertainty. Pharma CEOs hate the uncertainty. If you look at their recent comments from pharma, it will and has already impacted their profits, their R&D efforts, and personnel jobs. Lilly said they will likely reduce research investments and cut people. Roche has said M&A is hard to evaluate because of the uncertainty. And Pfizer had their earnings call a couple of days ago or yesterday, and they are looking at lower investments in U.S. R&D and manufacturing because of these tariffs. And even without the upcoming pharma tariffs, Pfizer has already set aside $150 million in tariff costs in their 2025 guidance. And that doesn't include the pharma tariffs, and it also doesn't include reciprocal tariffs by other countries. On top of that, you worry about lowering drug prices. Trump has placed that in an executive order. How much is he going to do that? We do not know. If he pushes drug prices even lower, that could squeeze big pharma and large biotech margins even further. This is all leaving biotech in a flux until we know what the full changes are, and us analysts and investors could more accurately quantify that impact.
That sounds like a uniquely challenging environment, though. Beyond the policy headwinds you just spoke to, what is the current state of biotech and what could happen over the rest of 2025, in your opinion?
Yeah, I think it's important to understand that all of this has already happened. And I think we've gotten through most of those negative headlines. And imagine the worst case scenarios when thinking about what the consequences of everything that's going on. Investors and companies are definitely preparing for the worst. And you can see that reflected in the biotech stocks when they hit 2 to 3 year lows in early April, depending on what index you look at, XBI, NBI, or the BBC. That makes me think that the negative headline risk is mostly priced in. Biotech has been shrugging off any more of these negative news around FDA and tariffs over the past couple of weeks. And we've also seen these positive headlines, which don't occur very often, lead to brief rallies. For example, the new FDA commissioner, McCary, made recent comments that he supports accelerated approval paths and faster ways to get drugs on the market. And I think this bounce could potentially continue until we get the reality of all this FDA policy, and that includes the pharma tariffs. Once we get confirmation of the pharma tariffs, if they're extensive, that'll definitely pressure the whole group. There is some hope that the pharma industry can convince Trump to delay or just gradually implement the tariffs over several years, or look at other alternatives to bringing manufacturing to the U.S., like tax incentives. There's also the downside risk of what happens when all the FDA changes play out, will there be delays? Will there be postponements to meetings? And is there risk to the user fees, which funds almost half of the FDA review process? We also have to keep an eye on the macroeconomic conditions, like I said before. Pay attention to inflation, whether we hit a recession. That could definitely sink small cap biotech again. One other point I'd like to bring up real quickly is that there is a growing trend of Chinese biotechs beating out the US in new drug innovation. More pharma companies are collaborating with or acquiring China-based assets over US biotechs in the past 3 years. This is a pretty big topic that we're going to explore another time. But as we look toward, the later part of this year, large pharma companies have committed to significant M&A. But will it be the US or will it be China? One thing we're probably not going to see, which was expected earlier this year, is a mega acquisition, something bigger than 15 billion or 20 billion. Until we get some macro certainty, I don't think that's going to happen. We'll just have to wait and see how this plays out and see if the public sentiment can change the direction that we're heading into.
Yeah, hearing those comments, kind of a quick extemporaneous comment or thought for you to react to. It does strike me that a lot of these smaller biotech companies are constantly or perpetually raising funds, and this is probably a pretty tough climate to be raising said funds. So I would think that there could be quite a few acquisition targets. Do those thoughts hold water with you?
Yeah, I definitely agree with that. It is also a matter of when pharma companies feel comfortable in acquiring those assets. If a biotech company is running out of cash, is it easier for the pharma company to wait it out until the biotech company has to do a fire sale and liquidate their assets? If they see a key inflection point for the pharma company, they can wait for clinical data and have proof of concept and then take the smaller biotech company out.
That makes sense. And just wrapping up, Do, could you provide an update on the couple primary therapeutic trends that you're watching most closely in 2025?
Yeah, the two trends that I called out before were in the obesity space and their drugs, and this class of oncology drugs that are targeting PD-1 and VEGF, bispecific antibodies. First, looking at obesity, it's a well-followed space. Everybody's interested in what's happening to it. We have two market leaders, and right now, Eli Lilly is clearly winning over Novo Nordisk. Late last year, Lilly released data from a head-to-head trial that shows that their GLP-1 Zepbound was better than Novo's Wegovy in the amount of weight loss that is seen in patients. And Lilly also had the first successful phase 3 data for an oral small molecule GLP-1. Novo is doing as much as they can to stay in the market with a significant presence. They are the first to market. They do have the name recognition. I mean, they sell Ozempic, and that's something very commonly known by the public. I think as we see for the rest of the year, other large pharma companies trying to catch up, they either are going to push their in-house obesity programs or acquire obesity assets. We saw Merck make a move, didn't have an obesity program, in-licensed an asset from a Chinese biotech last December. Roche paid nearly $2 billion for Zealand Pharma's phase 2 non-GLP-1 obesity drug. And now we're seeing Pfizer is going to be a shopper of a obesity asset because their lead obesity drug an oral GLP-1 failed because of safety issues. And that's good news for the smaller biotech companies that are potential acquisition targets, namely Viking, Structure, Terns, and Metsera. We also have another development where we had copies of GLP-1s being sold by telehealth operators. That can no longer be done because the FDA removed the GLP-1s from the drug shortage list. The solution that they came up with is now the telehealth operators like Hims and Hers, Rose Health, Weight Watchers have formed collaborations with Eli Novo and Eli Lilly and Novo Nordisk to sell their branded drugs on these firms' offerings. So it's a win-win for both groups. When you look at the second therapeutic trend, the PD-1 VEGF, that is still building up. I think that within the biotech investment community, it's pretty well known because of the excitement around it. Among the generalist investors, I think it's less known. The leading PD-1 VEGF that is owned by Summit and licensed from a Chinese company, Seco, they had their third win in a phase 3 trial that beat another anti-PD-1. If you remember last year, this class of drugs created a lot of excitement because it beat Keytruda, and that is the #1 cancer-selling drug out there. It's been a bit volatile because immediately after that third win, Seco came out with the first survival data, and Summit's drug beat Keytruda again on survival, but it wasn't statistically significant. And it was, I would say, only a 22% survival benefit, which is meaningful, but I think investors wanted more. And the stock, Summit stock dropped on that news. We'll get a ton more data this year. Summit has their own US trial reading out mid-year. The competitors, it's still Bio, will have phase 2 data second half of the year. Biotech will have an update before year end. And just to give you an idea of the opportunity, Keytruda sold $30 billion in sales last year. The whole anti-PD-1, PD-L1 group sold nearly $60 billion in 2024. And we're talking about a drug and a drug class that could overtake this whole dominant drug anti-PD-1 share from the market. And there are additional themes in biotech that we track, other areas of oncology, inflammatory disorders, heart disease, and you can absolutely keep up with them in my Biopharma weekly report that we publish every Monday.
Awesome. Thank you for joining us today, Do, and a special thanks to the producer and editor of the podcast, Joe Brunetto. Thank you for listening, and don't forget to subscribe, as well as visiting www.watertowerresearch.com to stay up to speed on the company's small cap written research reports, podcasts, fireside chats, and conference schedules. We will see you the next time for another edition of the WTR Biotech Spotlight Podcast.